just staff side, Abid and me, Nathan. So we're going to talk about BBRI. So for first of all, the company profile, PT Bank Rakyat Indonesia or BBRI is a state-owned enterprise engaged in banking business. It is the largest bank in the micro, small, and medium enterprises segments and provides the largest micro banking services in Indonesia and globally. Alongside its focus on the MSME segment, BRI also develops various consumer banking products and institutional services for urban communities. For the group structure itself, it is owned by the government for 53.90%, public ownership of 46.8%, and 0.01 treasury stocks, with a revenue of 89% as of 2019. It also have revenue per company of BRI, Bank Syariah Indonesia, Raya, BRI Insurance, BRI Ventures, BRI Finance, BRI Fast, and BRI Life. With BRI Danarisa 67%, Bank Syariah Indonesia 17%, Raya with 87%, BRI Insurance 90%, BRI Ventures 97.6%, BRI Finance 99%, BRI Fast with 100%, and BRI Life with 91%. With e-banking services supported by 24,000 ADM units and 300 EDC units spread across Indonesia, BRI is committed to supporting increased efficiency in national economic activity. Simultaneously, it aims to enhance convenience and ease customers' transactions based on the evolving needs of banking services for all level Indonesian society.
Okay, moving on. So the important transactions conducted by BRI in the past, which is widely recognized by the banking sector, and the major transactions which are profitable. So basically, in 2007, BRI acquired Bank Jasa Harta for 67 billion rupiah to expand into the Sharia business to target the Muslim market, which was later merged with Bank Syariah Indonesia in 2018 for 400 billion rupiah, which is clearly a major profit. Next, moving on to Bank Argo, in 2011, BBRI purchased 87.1% of Bank Argo for 330 billion to accelerate the presence of itself in the agribusiness. Agribusiness is basically related to the farming sector, so Bank Argo had experience in that sector, and BRI saw potential and wanted to inject itself into that sector. So it purchased 87.1% in 2011. Moving on, in 2015, BBRI purchased 91% of BRI Ingin Life for 1.6 trillion rupiah, currently known as BRI Life, which is the focus of life insurance, and they are competitors with big insurance companies like Prudential and Allianz, and this is also considered one of the big investments that they did. In 2016, BBRI increased its stake from 45% to 99% in MUFG for 368 billion rupiah, which currently is known as BRI Finance. Moving on, in 2019, BBRI took over the shares of PT Asuransi Beringin Sejahtera Harta Makmur with 1.04 trillion rupiah. This is equivalent to 90% of the company's whole control, which was taken over from BRI. Currently, BRI-NS is known as BRI Insurance. Okay, moving on, my teammate Sahil will take over from now.
Okay, so as we can see here, these are the total deposits brought by BRI. And as we can see, deposits has consistently grown every year since 2016 at a compounded annual growth rate of 9.54% per year. We can see a significant increase in deposits in 2016 and 2020. This is due to tax amnesty in 2016 and COVID-19 in 2020, which caused an increase in people depositing their money in the bank, specifically time deposits. As we can see in 2020, it peaked at 2020. Moving on, we can see the cost of finance as net interest margin of BBRI. If we compare to its other competitors, BBNI, BBCA, and BMRI, BBRI has the highest cost of finance. This is due to BBRI focusing more on, the reason that BBRI has a higher cost of finance than compared to their competitors is due to the fact that their CASA ratio is below its competitors. This can be seen in the chart below. Also, the table shows that BBRI has the highest net interest margin, which is due to BBRI focusing more on microloans and MSMEs, which are riskier loans but have higher net interest margin. Ideally, any bank should have a CASA ratio of at least 50%. If not, their cost of finance will just be too high. So as we can see here, time deposits, cost of finance is 5.4%, and CASA cost of finance is 1.2%. This is due to time deposit paying out a higher interest rate. LDR. In my opinion, the ideal LDR ratio for a bank is between 85 to 95%. Anything below 85% just means that the bank is too conservative, although sometimes this is necessary, especially during uncertain times. And anything above 95% means the bank is just too aggressive and could make the bank prone to a bank run, which is not ideal. Credit breakdown. We can see on this chart below, for micro loans, it actually reduced from 2019 to 2021. This is due to the loans being restructured due to the pandemic. For productive loans, we can also see clearly that NPL stayed the same in most segments other than medium and SOE companies in which credit was restructured. Red flags. One of the biggest red flags to BBRI is that since they are a state-owned enterprise, they end up giving loans to other SOE companies which don't really have the best reputation, especially after what has happened to Garuda Indonesia and currently what is happening with Waskita. Impairment. BBRI's impairment is quite high, but this is usually the case for SOE banks, and especially BBRI, which gives out riskier loans. It is better for them to have a higher impairment, as this does not mean credit loss. It is just simply an allowance, so it is better to be conservative. Dividends. BBRI pays out dividends to its shareholders. They usually pay out around 65% of its income, but the past 2 years they have been paying out 85% of its income, which I don't think they will continue paying as a bank, as banks are high capex businesses, and paying out 85% in dividends might just not be sustainable, as they need to reinvest back into their business. That's a valuation. So I decided to this is my valuation method for BBRI. I based it on conviction, stability, return, growth, dividend, leverage, and market. And as we can see, I think conviction for BBRI is 99%, as they have always been they've been running for above 100 years now. Stability, I think BBRI is a pretty stable business and should still be there in the future. Return, I put it at 18% with the benchmark of 20%. Growth 10%. We can see this by looking at the deposit growth also. Leverage is it's a bank, therefore it's 100%, and market is 50 trillion, which is just their net income actually. So I put a fair value of 20x earnings. So in my opinion, their intrinsic value should be last year's net profit, which is 50 trillion times a PE of 20. So their intrinsic value should be 1,000 trillion, and current market cap is 814 trillion. So which gives us a margin of safety of 22.85%. So for me, it is a sell, as I don't think a margin of safety of 22% is enough to buy a stock.
Hello, my name is Jonathan. I am here to talk about my research project for the OCBC Investors Club, and my company is BCA. I will talk about 6 things in this presentation. I will talk about the corporate governance. I will talk about BCA's security information. I will talk about their financial highlights and ratios. the valuation techniques I used, and the conclusion that I have reached during my research. First, I will talk about corporate governance. BCA's goal in corporate governance is to become the people's mainstay bank of choice, which acts as an important pillar of the Indonesian economy. They achieve this with the following 5 principles. First, I will talk about transparency. BCA often creates and publishes corporate governance implementation reports without breaking any secrecy laws, of course, that will be publicly accessible to all shareholders whilst addressing them if BCA gets coverage by mass media. Second, accountability. The board of directors of BCA, as well as significant managers, have clear duties, therefore responsibility and accountability for their actions. 3. Responsibility. BCA will act as a good corporate citizen by following all laws and regulations. 4th, BCA is free of third-party influence, as it makes it a policy to avoid conflicts of interest. 5th, fairness. BCA treats all stakeholders equally, as well as giving them an opportunity to express their opinions. Next, I will talk about their security information. Their ticker is BBCA. Their market capitalization is 1,112.56 trillion rupiah. Their daily turnover is 340.59 billion rupiah. Their issued shares at the moment are 123.28 billion. Their top shareholder is a company called Dunia Investama Andalan with a shareholding of 54.942%. I will now talk about their financials and ratios. I'll talk about their revenue. Their revenue has increased by 19% in 2022 as compared to 2021. Their operating margin has increased by 29.93% in 2022. Next is their net profit margin. It has also increased by 29.64%. Their EPS in 2021 was 255, while their EPS in 2020 was 330. This has created a 29.41% increase in the EPS. The return on assets in 2021 was 2.8%, and in 2022, 3.2%. It was an increase of 14.29%. However, it has to be noted that the average return on asset for BCA over the past few years is 3.2%. So the fact that 2022's return on assets increased from 2.8% to 3.2% is actually just BCA going back to their average point. Next, I will talk about the net interest margin. BCA's net interest margin has increased by 3.92% from 5.1% to 5.3%. However, it has to also be noted that even though it is an increase of 0.2% over the previous years, BCA's net interest margin is 6%. I have also calculated the DuPont ROE for 2021 and 2022. In 2021, the DuPont ROE is 12%, while in 2022, it's 20%. This 8% increase indicates a 66% overall increase year on year between the 2 years. The average ROE of BCA is 16%, which means in 2021 they underperformed, while in 2022 they overperformed. Next, I will talk about their valuations. This is the chart comparing BCA to BRI. For BCA, for the first valuation method, I will use Peter Lynch's technique. I have estimated their future EPS growth to be 13.37%, and the dividend yield is 2.27%. The PE ratio as of recording is 24.12. the result is it is 1.54. As it is above 1.5, it is just slightly overvalued. To give you information, if the result is 1 or below, it can be considered fairly valued, or if it's below 1, it can be considered overvalued. The range of fair value is 1 until 1.5. As BCA is 1.54, it is actually slightly undervalued, as the higher the number above 1.5, the more undervalued it is. If it's 1.5 to 2, it's undervalued. If it's anything above 2, it's very undervalued. Next, I will use Benjamin Graham's technique. I have figured out the EPS of BCA to be 374.12. Their PE ratio, if there is no growth, will be 8.50. The growth rate, as said before, is 13.37%. As I want to make a more realistic and not very optimistic view, I take the number 1. The average AAA bond that I found is, as of the recording, is 4.65, and the current AAA bond is also 4.65. And using the formula, I figured out that the intrinsic value of a BCA share is 8.812. But as of recording, the current price is 9.025. Therefore, as of right now, it is overvalued by 843 rupiah, also known as 10.30%. However, it has to be noted that maybe it is only overvalued now because of all the info that we have. Even though it is overvalued, it is only right now, because if you see the information, for example, the reason why it may be overvalued right now is because BCA's performance this year, aka 2022, has increased substantially from 2021. This may have been because of the fact that BCA participated heavily in the economic recovery of Indonesia post-COVID, such as working with the National Central Bank. Aside from that, BCA won many awards this year, such as the Best Bank in Indonesia. Furthermore, their CEO also won an award in 2022. Furthermore, their CEO also won an award in 2022 about banking. They have also leaned in very heavily to digital e-banking in 2022, which has proven good as it has increased their financials as seen by the ratios that we have seen previously. Second note is that their liquidity is actually very good in the business. Even though they have a debt to equity ratio of 525.56%, their cash ratio is 11.31%, and their current ratio
1, 2.
Okay, this is for slide 11. Next, the next valuation technique I used is the Benjamin Graham technique. I have found out the EPS to be 374.12. If there is PE with no growth, I estimated it to be 8.50. As previously mentioned, the growth rate is 13.37. In this one, I'm using a relatively pessimistic number of 1. It can easily actually be higher than it. The average bond I used is 4.65, and the current AAA bond is also 4.65. Using this, I figured out the intrinsic value of the share is 8.812, and the current price is 9.025. So if we really use a pessimistic evaluation, it's actually overvalued by 843 rupiah or 10.30%. However, it has to be said that this is a pessimistic view. If anything happens above this pessimism, it will not become overvalued and instead it will be fair. In conclusion, BCA has performed very strongly. It has increased a lot in 2022. It is a very solid company and has been increasing every year for the past 10 years barring COVID. So they are doing stuff right. If we go by the numbers of our valuation, the shares are only slightly undervalued. Therefore, the shares should be bought. As it is only slightly undervalued, the shares should be held and not sold because it's very close to its fair value. Thank you for listening.
Hi, we're from Group F. My name is Rachel May. That's Daniel Patrick, and this is Pia Shah. And today we're going to be talking about the technical analysis about Telkom.
Okay, so the first thing that we're going to explain is the corporate governance of Telkom. And the goal of Telkom is to maintain accountability, improve performance, and meet the expectations of their shareholders.
So we're going to start talking about the principles of Telkom, and the first one is transparency. And from this description, they're saying that they want to have easy access to information for the investors through the various sources. And the second principle of Telkom is accountability. Each of their section of governance are accountable with their obligations.
The third principle of Telkom is principle of responsibility. From the description, you can see that Telkom ensures compliance with applicable laws and regulations. The fourth is principle of independence. Telkom professionally works without conflict. And the last principle is equality and equity. Telkom fulfills the rights of the stakeholders that arise.
Okay, so next up, we're going to be explaining about the financial ratios. We're going to analyze the financial ratios of Telkom. First of all, is profitability.
So ROCE is basically the return that they get from capital that they have employed. And here we can see that the ROCE is decreasing by 15%. Next up is their profit margin, and we're going to be seeing their operating profit first, which is operating profit divided by revenue. We can see that it's decreasing by 19%, and the net profit margin, which is their net profit divided by revenue, and it's decreasing by 21%. And the last one is their asset turnover, which is basically the sales that they were making from the asset that they've invested in. And in here we can see that their sales are increasing by 4%.
Okay, so next up, we're going to be explaining the long-term solvency of Telkom. The first one we'll be explaining about debt ratio, gearing ratio, and leverage ratio. The three of them are connected to each other. So first of all, debt ratio, it's decreasing, which means that it's either that their debt are decreasing or their equity is actually increasing. And next one is gearing ratio, which is basically debt divided by equity plus debt. And it has the same reason, it's also decreasing, which means that it might be because of their equity rising. And then there's leverage ratio. Leverage ratio itself is the reverse of gearing ratio. So leverage ratio is equity over debt plus equity, and it's decreasing. It's increasing actually because it's the reverse of gearing ratio. And the last one I will be explaining is interest cover. And for Telkom, their interest cover is decreasing by 10%, which is quite a great amount. And this may be because of their operating expenses increasing, or that their interest, their financing activities, the interest that they get from their financing activities is increasing.
So even though their inventory turnover is bad, their receivables collection is decreasing and their suppliers are allowing them to pay in a longer period, which in the end causes working capital cycle to be favorable.
For short-term solvency, as you can see from the table, Telkom's short-term solvency decreases in the year 2022. It's decreasing because the assets for the year 2022 is less than 2021's assets. The inventory and assets is lower for 2022. The difference is not too far, but it may still be attributable equal to the financing that is required for expansion.
Okay, so the next one is the valuation of telecom. Their price to earnings is 15 times, which in the average of the industry is actually pretty good because normal one is usually like 20 or like 25. The lower it is, the better. So 15 is actually a pretty good price to earnings ratio. And then we have price to sales and price to book. Both of these are actually a bit adverse because usually it's 1 time until 2 time. For this one, it's like a bit over 2 times. So it's a bit adverse. And then we have the technical analysis of telecom. And so we'll be explaining to a graph. And as we can see, this graph is in a sideways trend. And it can mean 2 things. It has an even chance for the stock price to either decrease or increase. But most likely, if you see the volume of the graph, it's more likely for the stocks to decrease in the price. And then we have our conclusions.
Based on the financial analysis, we can conclude that even if the profitability and solvency of Telcom has decreased compared to 2021, they are still in a safe number and some even in a good number, which indicates that Telcom's performance is still managed after the huge expansion in 2022. And technical-wise, Telcom is currently going through an almost stagnant sideways trend that indicates further improvement is needed in order to increase their share price.
And last, we'll be giving a recommendation on whether to invest in Telcom or not. But from us, for now, we wouldn't recommend to invest in Telcom because, like we've seen from the graph, we've seen from their financial analysis, we've seen that they're kind of in a sideways trend. But there's a chance that in the future, probably in the 3rd quarter of this year, it will actually increase. And why is that? So we believe that there's a thing called in the stock market that is known as history repeating itself. Last year, the stocks of Telcom increased significantly in the 3rd quarter, like in the end of 3rd quarter. So around like the end of August, it's actually increasing. So then we might actually encourage people to actually sell their shares so they get a huge profit from there. That's all from us. Thank you.
Thank you so much for your time and attention. We hope you found this information useful. Thank you for watching.
Hello everyone, my name is Kanya. I'm from Group E, and today I'm going to explain about a financial analysis of Telkomsel. So first I'm going to explain about the company's overview. So Telkomsel is a telecommunication company based in Indonesia. It is the largest mobile network operator in the country and a subsidiary of PT Telekomunikasi Indonesia Tbk, commonly known as Telkom. So Telkomsel provides mobile telecommunication services including voice call, SMS, and data service to both individual and corporate customers. So now I'm going to explain about the financial position of Telkomsel right now. So the current assets and the fixed asset has increased since 2021. So the total assets would be 100 billion, which has decreased from last year, which is 2021. And the current liabilities is about 32 billion. The non-current liabilities is about 38, and the equity has decreased to 30. So it makes the total liabilities and equity to only 100 billion in rupees. Now I'm going to explain about profit and loss. So the revenue has increased since 2021, but the expenses also increased, which make the EBITDA about 50, which is the same as last year, and it makes the net income decrease because of the expenses that they're bringing out. So for the cash flows, the cash and the cash equivalents at the end of the year has increased to 6 billion in rupees. Now I'm going to explain about the financial ratios that for this year. So EBITDA margin is about 57%, the same as last year. The net income margin is about 21%, which has decreased. The return on assets is about 18%, which also has decreased too, which makes the return on equity about 53%. So now I'm going to explain about the industry analysis. So the telecommunication market in Indonesia is worth over 12 billion and is expected to grow at CAGR of 4.1% over the next few years. The mobile segment is the largest, accounting for over 90% of the market. The telecommunication industry in Indonesia is dominated by a few large players including Telkomsel, Indosat, and XL, and so on. So the government of Indonesia has set a target of connecting 100% of the population to the internet by 2025. The government is also investing in development of 5G networks. The telecommunication industry in Indonesia is expected to generate over 20 billion in revenue by 2025. So now I'm going to explain about the market share, where Telkomsel is one of the biggest market share in any other companies, with their biggest competition, which is Indosat and XL. So this is their customer base with a total of 150,000 customers, which has decreased since 2021. Next is the Telkomsel dividend. Telkomsel dividend policy is to pay out 60% and 90% of its net income to shareholders in the form of dividends. Telkomsel dividend is paid twice a year in June and December. So this is Telkom's stock price right now. So from this stock price, we can see there's a lot of benefits on investing to PT Telkomsel Indonesia. One of them is strong market position. PT Telkomsel Indonesia is the largest telecommunication company in Indonesia and has a dominant market position. This provides stability and a competitive advantage in this industry. Next is they have extensive infrastructure. So Telkom has a well-established and extensive telecommunication infrastructure across the country. The infrastructure allows the company to provide reliable and high-quality services to wide customer base. They also have diversification, so Telkom has diversified its business beyond traditional telecommunication services. It offers a range of digital service, internet connectivity, and subscription-based TV services. This diversification helps to mitigate risk and tap into multiple revenue streams. We also have a growing market where Indonesia has a large and a growing population, which increasing demand for telecommunication services and internet connectivity. Telkom is well positioned to benefit from this growth in the long term. However, they were unfortunate to have a big loss with their big investment with Goto at the end of 2022, which resulted in their stock price to go down. They're investing in more digital development and streamlining their businesses, which can result in better forecasts of earnings. As for technical analysis of Telkom, would probably say that it's currently at the support of 3960 and is on a slight downtrend. Telkom has the highest PBV in comparison of ISAT and EXCL, and the forecast of Telkom predicts a stagnating and slight downtrend of earnings. So it's important to keep note that PT Telkom Indonesia has reported losses from its investment in PT Goto, amounting about 6.74 trillion at the end of 2022. This recent development should be considered when evaluating the investment potential of PT Telkom Indonesia. So that's it for my presentation. Hope you enjoyed it. Thank you.